Hello, everybody. I'm Peter Grant with Zaner Metals in Denver. This is This Week in Metals. Hello, Peter Thomas. How are you?
Hey, nice to see you, Pete. It's all good, man, and I'm looking forward to getting the show going because there was a lot of stuff going on like they thought there would. Did
Yeah,
you get an
welcome to the
overview
first
of the?
week of November and election week.
Yeah,
So I think it's going to be
election
an
week,
exciting
exactly.
one to be sure. Let's talk about last week real quick. So
Please,
gold was under pressure, kind of the reemergence of COVID concern.
right.
Some states and cities are shutting things down again, and so obviously there's concern about demand destruction. So gold ended down 1.3% last week.
Right.
Not too bad on the month, though. It was only down 0.6% on the month, but it was the third lower monthly close in a row. So that's a little bit of a concern, I think. Um, from previous shows, we've been kind of watching the 100-day and 20-week
Yeah.
moving average. Both of those were penetrated last week. So again, the technical picture has deteriorated somewhat last week. But I'll point out that the September low at 1848.45 is intact. Um, so
It's
tough
an
call,
election, Pete. It's an
especially going
election.
through
You
a
can't, I
volatile
mean,
week.
you got to let the charts go, man.
Let
You
them
know,
go. Let
yep.
the election play out.
Yeah,
Exactly.
exactly right. Next week we'll bring in all the technical factors in our show. We'll go over what held, what didn't.
Very good.
Okay.
So
Hey, wait. World Gold Council came out with a report. Do you
yeah,
have
the
it?
Q3 demand
Right.
report came out last week.
Yeah.
A couple interesting things.
Okay.
First of all, the big source of demand, and we've talked about this for months, is ETF inflows.
Right.
ETF inflows were 273 tons in the
Wow.
third quarter, pushing total ETF holdings to
The record.
3,880 tons. That's a new record.
Yeah. Yeah.
Yeah. So
And
very
they've
strong
taken
demand.
over the gold market. Pretty much what's happened is all the stockbrokers that are getting calls from their people going, I'm up 200% in my Apple stock, put 20% in gold. They're running to the ETFs instead of buying physical. And it's a phenomenon that's been occurring now for 4 or 5 months, right?
Yeah.
Yeah.
So physical saw really good demand in the third quarter as well. Bar and coin investment, 222 metric tons, up 49% from a year ago. So again, solid. Coming primarily, much like the ETFs, from Western investors, Europe
Yes.
and the United States. But in the physical realm, we also saw pretty good demand from China and Turkey. So Turkey obviously having
Turkey
some
has been
problems.
leading the demand. Turkey has
Yeah.
been insane for gold. They're the leaders right now.
Yeah, that's largely because the Turkish lira is
Turkish lira has taken a
taking a
nosedive.
whooping.
It's lost 66% of its face, and people are in a panic. And if you didn't own gold, you got a real problem.
Yeah, so while ETFs and physicals look pretty good in the third quarter, jewelry's still pretty soft. Jewelry demand was only 333 tons, down 29% from a year ago. So again, demand from the East for jewelry, particularly India and China, is still pretty soft. Not as I mean, it was up from the record lows in the second quarter, but
Right.
um, still not great. We're still waiting for them to come back to the market. And I
Well,
know I've
and,
said it
and
before, they'll be back.
oh no, India will be back. With Diwali's here next week. Remember, hopefully we'll see a good participation in the holiday. They've put up screens. They're working out how to transact. The Indians have been trading gold since before recorded time, and because of that, they've put up the screens and everything else, and they're going to be exchanging. And I think we'll see better numbers. At least I hope so.
Yeah, so one aspect of third quarter demand seemed to get a fair amount of press, and that was that central banks were net sellers for the first time
First time,
since Q4 of 2010. So
yes.
almost a decade. The central banks have been buying, and now we saw net sales. It was a scant 12 metric tons, though, and it all came from Uzbekistan and Turkey. So again, what I think is going on here is that really the big central bank buyers just weren't buying.
Yeah, yeah. That what it goes to is what's not there versus what we're seeing, and what's not there is we're not seeing them come in. It's really been just a neutral page right now. Just we got the elections, nobody's doing anything, and I think Pete, one thing that we have to address is that central banks get their funding from the government, and the government is doing a lot of expenditures for masks, cleaning, things of that nature in their federal buildings and things of that nature. So a lot of equity is flowing out of governments in order to battle this disease, and it's being reflected in the gold purchases.
Right. Yeah. So just that emphasis has been diverted to COVID response,
Right, exactly
and
right.
consequently the central banks aren't
Well
aren't
put.
buying gold, and some central banks, apparently Uzbekistan and Turkey are selling gold to raise cash,
To raise
and so
cash,
it,
yeah.
it all makes sense. But
Yep,
overall. Gold demand in the third quarter was 892 metric tons. It was down 19% year on year. But
year
if
on
you
year.
think about it, gold is only off about 10% from the record high set in August. So, all things considered, the price is holding up pretty well. What do you think?
Well, let's take a look at what's driving it. I mean, what we saw is a nosedive in the stock market, monstrous break. And oh, by the way, a lot of those guys are trading on margin, and margin call has to be met at the end of the day. And if you're showing a 50, a 49% profit ratio in your gold holdings, and your margin clerk is going, we want a couple $1,000,000 from you by the end of the day, you're selling your gold. And we have been seeing people liquidating ETFs in order to meet margin calls for this nosedive in the stock market. And remember, there's an old saying which says they always sell the good first and hang on to the bad. And that's what's going on. They're selling their gold in order to hang on to their cratering stocks. And that's what's happening, folks.
Yeah, here's the other thing. In advance of the election, everybody's up in their margin requirements.
Ah,
Some of
very
them,
valid point.
yeah,
Yeah.
some of them are going 100% into
Yep.
election day. You got
Yep.
to have 100% of notional on deposit,
Yeah. Oh,
which,
yeah. And that is in everything. That is in metals. That is in they even did that. I think the LBMA even did that on things like nickel and copper. And I was like, whoa. But I
yeah,
understand it. They have to protect themselves. They have an obligation to protect their clients.
yeah, exactly. And we're going with a little bit higher margins
Yeah,
as
sure
well
we are.
for our hedgers. I mean, ours are extremely low because our clients are indeed hedgers.
Yes.
But so we're raising them a little bit, but it's 4%. Is
We're
what
still
we're.
the most inexpensive, but that's because we use the market for what it was designed to do. There's no speculation here. We're mitigating risk. So there's a big difference between Zaner Precious Metals and some stock house where people are speculating. We just don't speculate. We mitigate.
Yeah,
But let's
exactly.
move into silver, Pete. I think we had
Yeah.
some
This.
the Silver Institute, which is I've always said is probably the best paper out there for silver, says we consumed about 98 million ounces last quarter. But the interesting thing to me was in totem, 297 million ounces for the first 3 quarters of the year. That's up 65% on consumption for metal. Staggering. So these numbers up here at 25, 24, 30, back and forth, they make sense. We're seeing the product being used, and we're seeing the miners slow down production due to the pandemic. So it all makes sense today.
Right, and this our sense was, and we've talked about this for a while, that
Yeah.
as the governments try to stimulate their economies, a lot of those funds are going into kind of green initiatives, solar
It's
being
true.
one. And so the Silver Institute, is pretty optimistic on expansion of solar usage,
Yes.
and consequently silver. Even with thrifting calculated in, they're expecting increased demand for silver
Yep.
from
So
the
yeah, that
solar
was that,
sector.
that was exciting news. So looks like hanging on to your silver wasn't such a bad idea if you did.
Here's the thing that I found particularly interesting. Well, while silver was down 3.8% last week, For the
Right.
month of October, it was actually up 1%.
That's interesting.
Yeah.
Yeah. So it held its gains, is what you're saying.
So similar to gold,
Yeah.
the September low at 2164 has held. We were watching here. We were watching the 100-day moving average and the 20-week moving average as well. Again, they were penetrated, but silver closed back above those moving averages.
Yep.
So
Absolutely. So,
um, and the ratio traded back above 80. So again, uh, when the ratio is rallying, I'm never terribly optimistic silver, but at this point, anyways, the ranges are holding going into the election.
all right. Well, you know what? I think we covered it. I think we're friendly to it. Why don't we move into the PGMs, platinum, palladium,
Yeah,
and take a quick look at what's going on there because we're still seeing good consumption and slowdown in production. It's kind of the same song, guys. We're seeing a lot of people stepping in here, buying this product, and some of it is speculation, in my opinion, but we are seeing fairly good consumption, and I think it's going to continue. We're looking at 196 million ounces consumed. I believe that if that increases by 10 or 12% next year, we could outstrip production, go into a mine than there is demand, and that could be very interesting.
yeah. So platinum was down 5.8% last week, so a pretty big hit. We were concerned about its inability to kind of sustain gains above $900,
Yes.
and that proved to be a warranted concern, it seems. It was down 5.1% for the month of October. It was a second consecutive lower monthly close. But again, the range is intact. Those
Yeah.
September lows down around 825.50 are holding. There's a good intervening support at 837.50.
Yep.
So at this point, they're hanging in the range. Palladium was down 7.6% last week, down
After that monstrous
4.6% the
rally it
month.
had, it just gave some of it back. That's all.
Yeah, and
Yeah.
we were kind of tracking Palladium within a bull channel, and the
Yes.
lower end of that channel was violated. Um, but it held both the 100 and the 200-day moving averages right around the lows. 2178, I think, was the low last week in Palladium. Those moving averages were 2177 and 2165, respectively. So pretty, significant support levels. um, we'll have to again wait and see. I think again, as we talk about COVID concerns and demand destruction, it's
Right.
typically pretty negative for the broad commodity complex. And a
Yes, it
lot of
is.
investments in commodities take place in commodity ETFs and commodity pools, where all of these things are kind of mixed together. And
Sure.
if you're thinking, I want to be out of oil, if we're going back into lockdown on the economy. You sell your commodity fund and you're selling gold and platinum and palladium and silver
Sure.
and
Sure.
everything. So that provides some pressure to the market as well.
Well, I mean, you want to sell oil, but you look at the oil, and 90% of all the oil consumed is consumed by shipping. And right now, they're using 5 million barrels a day on shipping. You look at Baltic Dry, I mean, every square foot of space is booked. So product is moving. So we're seeing good demand. So as we talk about in metals, buying breaks is not such a bad strategy.
Right. No, I agree. Yeah, when
Yeah.
the kind of the deleveraging
Right.
takes place, it's typically a pretty good buying opportunity.
Yep.
Copper was down 2.8% last week,
Yes.
up 6.2% for the month of October, though. We're corrective I mean, we're only about 5% off of the 2.5-year high that was set a couple weeks ago at 321, 322 ish. So we're not really even in corrective phase. I think it's a pretty normal pullback given the magnitude of the gains that we've seen in copper in recent
Which have been
weeks.
monstrous. And let's throw in some reality here. I have been talking about the potential for a failure of the negotiations between the miners and some of the major producers, and it happened. All right. Chile, the miners walked away from the negotiations. They're the largest producers of ore, and that's very, very interesting. We're seeing Glencore is also having problems. So as far as mitigating the potential for strike, it's gone. We're going into a strike, which means that if they're not producing it, folks, that means it goes on the backs of our great scrappers in this country and in Europe, and which has a very aggressive recycling program. So what's happening is we're putting more weight on the back of the scrappers here. And as far as production goes, we're not seeing fresh ore come in. It's going to be an interesting battle, Pete. Once again, it's swirling around. We're going to see who wins, you know?
Right, right. And as that supply weight gets put more on the scrappers, I think they'll be rewarded
I hope so. They deserve
with
it.
higher prices.
Nobody
Yeah.
works harder than our scrappers, that's for
Yeah,
sure.
so some interesting things came out last week with regards to economic data. They again have tended to be fairly positive. One thing in particular that we mentioned in our last show was expectations for durable goods came in way better than expected.
You and I were both predicting higher numbers in the last
Well, we
show, and it just blew us away.
okay,
I mean,
okay.
we were just like, what happened, you
Yeah,
know?
we were mentioning whispers of better than expected
Yes,
data, but
exactly right. Yeah.
this was a little bit more than expected. So
Whoa. I
durable
mean,
orders,
even the president went, yeah, whoa, hey,
yeah,
look what happened, I mean,
1.9%, plus 1.9%. Expectations were plus 0.3 versus a plus 0.4% in the previous month. So that's a great number that is going to be generally supportive to the metals, copper in particular,
yes.
but also probably palladium because in that durable goods orders, transportation was up 4.1%. That's solid. It's reflective
Tractor
of some of the
trailers, man, the demand,
yeah.
let's not forget everything that goes on your shelf. Everybody who's watching this, every item that you get comes off the back of a truck. And those trucks are getting old. They've been rolling 24/7. Those guys have been battling this COVID disease. They are out there doing it and they are replacing those trucks. And because they are, we're seeing demand for product.
Right. Um, Q3 GDP, we were expecting a little bit better than the market as well, and we got that. It came in at plus 33.1% on expectations of plus
Yeah.
31.9%. Versus minus 31.4% in the second quarter. So we've rebounded smartly, to say the
Yeah.
least,
Yeah.
and I think it's all really encouraging, tempered perhaps somewhat by the reemergence of COVID and
Yes.
the uptick in cases kind of across the country and around the world for that matter. But the recession is over.
Yeah,
First
that's
and
what it
second
says,
quarter
and
negative.
demand. I mean, we're seeing cheap gas prices, good consumption of durable goods, good consumption of product. I mean, we are rolling, and considering that half the world is on Zoom right now, which is amazing. Imagine when this thing gets going.
Right. So let's look ahead to this week. I mean, the obvious, big elephant and donkey in the room, if you will, is the election on
Right?
Tuesday. So there's going to be some volatility, almost
Sure.
assuredly, surrounding that. Lots of talk about a contested election, contested results, and that we might not know for some time who the next president is going to be, and possibility of civil unrest. A lot of the police forces and so forth are girding for political unrest.
Yes, there.
So we'll have to see how that plays out. On Monday here, we've got manufacturing ISM and construction spending, factory orders, and auto sales on Tuesday. Expectations for
Tuesday's a
orders,
big day.
yeah,
Tuesday's a
auto
big
sales,
day. We have an election and we have the auto sales, which will tell us what the consumption of base metals is, and then we'll have a new president. So it's going to be amazing.
yeah, 2.9 million for autos and 10 million for trucks is the market's
10 million
expectation.
for trucks. Wow, that's a big number.
Yeah. On Wednesday, we have services, ISM and PMI. Thursday, we have the FOMC announcement,
All right.
and also claims. Claims were pretty good
No
this.
changes. No changes,
Yeah, no,
guys.
we're not
Don't worry about
expecting any
that one.
change
Yeah.
on monetary
Right.
policy. And then Friday, non-farm payrolls, baby. So
That
pretty big
that's
week.
gonna be interesting.
Yeah, markets expecting uh, plus almost 600,000 jobs. They're
Wow.
expecting the
That's
unemployment
big.
rate to downtick to 7.6% versus 7.9%
Okay.
previously. So action-packed week to say
Yeah.
the least.
Yeah.
And you know, to our hedgers, I say, get your hedge on.
First gold coin produced 700 BC. And for that was very interesting fact. Think about 700 BC, they were making coins and or casting gold coins and copper coins for monetary use.
Yeah,
It's been around a while, guys. It looks like it's going to be here a little while. That's
I
why I
think
have faith in
you were
gold.
making a market shortly thereafter, right?
Well, I sold Moses his first sandals, but I want everybody to know I gave him a deal. All right, I didn't lean on him at all. Okay,
Right.
hey Messiah, I got a little something for you here. Okay,
All right, everybody. That about wraps it up. You guys have a great trading week, and be careful out there because it's going to be a
Yep.
volatile one.
Watch midweek next week. Pete's special report will be out on Wednesday to recap all the insanity that's gone on, and hopefully it'll be informative for you.
With that, I'm Peter Grant, Zaner Metals in Denver. Have a great
Pete
trading week.
Thomas in Chicago. See you next week.